folks, welcome to Bean Counters Cafe at Ascentis and another episode of ATV. This video has actually been shot 2 or 3 times over the last week or so because of the revolving doors at 10 and 11 Downing Street. More of that later. So in this episode, Lee Koznowski is doing Tech Talk and he's looking at Approvalmax. I am continuing my series on Disc, and for the aforementioned reasons, Mark Overend is doing a slightly changed version of his tax tips and quick tip. So let's just jump straight into it with Lee Koznowski's Tech Talk, and apology in advance because when we move this piece into our editing suite, it slightly blurred the demo that we did with the client, but not so much that you won't be able to understand the great advantage of this app. So take it away, Lee.
Hi everyone, and on this episode of Tech Talk, we're going to look at how we can get fully involved in a paperless office. Now, hopefully, Xero and apps such as Dext Prepare take us a good percentage of the way there, but to be truly paperless, we need to go backwards with the integrations. So we're going to look at purchase order approval systems in this episode, and specifically Approvalmax. Now, I was joined recently by my good friends at LeadTech, and they have recently implemented Approvalmax. So I took the time to have a quick chat with them to see what their thoughts were. Here's what they had to say. So I am joined by Andy Longhurst, Managing Director, and Katie Rawlins from the finance team who developed the Approvalmax integration. So thanks for joining us, guys.
You're welcome.
First of all, Andy, obviously while the environmental impact is indeed an important factor, what was the real pain point you were experiencing that led to the implementation of an automated PO system?
Well, there was a few pain points, I think, Lee. Firstly, we had a business that were quite prepared to spend at will, which, as you can be aware, is quite painful on the bottom line. We had people with just little awareness or consideration of budgets and actually what the overall impact of what they were spending was actually having on subsequently the bottom line, our operating profit impacts. And just a lack of ownership across the business, a lack of accountability to the overall impact that was having, and then just that challenge around how hard it was to keep track of everything that was coming and going. There was a vast number.
Yeah, accountability. Key point there, really.
Yeah.
So, luckily, Katie, you actually had experience of Approvalmax before. So, kind of, what were the first steps in getting the LeadTech team on board with Approvalmax?
Yep, we looked at the workflows and what authorisation levels everybody needed to have and what steps we needed to go through in order to get a certain expenditure signed off.
Cool. And once that's established, how easy was it actually to set that up within Approvalmax specifically? Did your prior knowledge help, or would someone approaching this with no experience of Approvalmax be able to do this?
Yes, obviously previous experience does help because you know what you're doing, but it is pretty easy to set up. You just need to make sure you follow the rules and the lines that you've got in your head, and we'd already mapped those out anyway, so it was just putting paper onto the system.
And in terms of Approvalmax and the wider cloud space, what have you actually integrated Approvalmax with as well?
We've integrated it with Xero, which is our accounting software that we use, and also Dext, which we use for expenditure, so mileage and things like that, and that all flows straight through.
And we'll do a little demo of that so people can see at the end of this. But just going back to those pain points then, Andy, what improvements and benefits have you seen within the business as a result of using Approvalmax now?
I think it's given us a great process back into the business, which was much needed, and given us back control. I think that was for me really important as an MD, that we've got full control over that bottom line performance. We've given our heads of department full accountability of the budgets now, which I think was really important. Allows them to make easy decisions. We've coupled that with business cases that now support every request. I think again, it reduces those silly spends, those little incremental costs, which may be a throwaways, but bottom line is an impact, and ultimately gives a better link back to what they're spending and how that's having an impact across the business. It's given the whole business, I think, the focus.
That's the question of why you need to actually make that expenditure, doesn't it?
Yeah, and I think that's what Approvalmax has really helped us to do. It's helped to really give that visibility and ownership back in a business when it was necessary.
And we have that live budget feed, so you know if you're overspending or if you're still within line on your budget.
Yeah, it's a really good feature, is that?
Yeah.
So these things don't always run perfectly smoothly. So, what were the pain points of the integration, and kind of what advice would you give anyone, Andy, going through a similar process?
I think it's important that you dedicate resource to this. Thankfully we had someone who had experience in the process already. But if you've not, you need to make sure that you assign some form of resource to this, and that you do that process mapping to start with, so you're really clear on what you're trying to achieve and how you're going to take you through those steps. Make sure your budgets are clear and correct. I think for us it was important when we did this that we were really comfortable with the budgets and we were prepared for these to be spent ultimately. Because by doing this and giving accountability back to people, you're expecting them to spend that money. So again, that was really important for us. And I think above all, just changing the mindset and the culture of the business, that it's now a process to follow, that you need to go through this process, and ultimately, if you can't spend without having first raised the purchase order, which, again, it's quite difficult sometimes. We can do all the process and have all the software, but the people are still making those decisions, and we need to make sure they follow those processes. But if you nail all them, then it's really smooth, and we've got through that early stage, I think, really successfully. I'm seeing huge dividends with it right now, and puts the control back at my fingertips, which is really important.
Fantastic, yeah, that's great advice, thank you. And I guess just to demonstrate some of those points, Katie, we're just going to take us through the actual workflow that we developed within Lead Tech itself, are we?
Yes.
Right, Katie, so the first thing you did, I can see here, is you actually just set out what your approval system should be in PDF form, which is a useful handy tip to do before you jump into Approvalmax. And then actually taking us into Approvalmax, do you just want to talk through how that actually translated into the software itself?
Yeah, of course. So it was really handy to get a visual of how the authorization levels were going to work. Once we had that visual, we then put it into the workflow system on Approvalmax, so we could split it out by different people.
Which we've not got on screen here, but down to the left, we've got all the individual people here.
Yep, you can then set limits, monetary limits for each person. You can even split it down by certain suppliers or certain departments, nominal codes or products, as we have here. And it's really flexible, so you can either put it as people can authorize this, or they can authorize anything other than this, so it can work both ways.
Fantastic. So that's deep within the settings of Approvalmax, and I think it just leaves us really taking us through a quick example of actually raising a purchase order and authorizing it within Approvalmax itself.
Yes,
so
of course.
If we jump into that.
Okay, so it's really quick and easy to do. So you start off at the top, create new. You want to raise a purchase order. If you don't have access to putting bills on, that option won't be there. So it's only the finance department at our office that has that access. Okay. Everybody else just has purchase orders there.
Yeah.
So you create a request. Add in your supplier at the top, and this links straight from Xero or whichever finance system you're using. What date you are raising it, which will be today. If you have any comments, so here, this is where we put our business cases. If it's a really large amount that we're wanting to spend, we have to justify it here.
So this is an internal note, so this is you telling your line manager why you want this expense.
That's right, yes, but that doesn't show when the PO is raised.
Got you.
So we put in what we're ordering, how many, how much it is, and what nominal code or account you want it to go to.
Oops, we'll get the right code. Okay.
The VAT, you can either have it here, you can have it exclusive of that or inclusive of that, dependent on where your quotes come from.
That mirrors the format of Xero then, obviously.
Yep, and then which department or product it's going to go to.
Sure.
It'll total it all at the bottom here. And then if you have any specific delivery instructions for who you're sending the purchase order to, whether it's getting delivered to a different place, like a warehouse or anything, that all goes at the bottom. Then you simply click Submit for approval. That goes on the approval workflow. And then as you can see here at the bottom, it says the people that need to authorize it.
Is that one of or both?
On this situation, it's both, but it can easily be edited here. So you can, if someone's on holiday or they no longer work at the business and you've not quite removed them from the workflow, you can just do that here. And
Right.
you can also add specific people there as well.
Okay, so obviously in normal purchase order systems, we wouldn't advise you authorize your own purchase order, but for the purpose of this example, we've set this up so this will have emailed you, Katie,
Yep.
for approval, and we should just see that in your emails now.
So there we go. So approval is required. So you can do it two ways. So they get notified via email. If you've got the app on your phone, you can authorize it via that.
Sure.
So you can authorize it straight from the email by clicking approve. However, this doesn't show the budget, whether it's in line with the budget or not. So if you go into the online web version, you can also approve it right there. So just click approve or reject. If you are rejecting it, you do need to put a comment in there, so why you've rejected it or if something needs changing. But then it's done.
Right, and that's a purchase order raised and approved in this system. And obviously we don't have the facility, but the invoice would then come in separately, and you would use Approvalmax to match the invoice against the purchase order, and that sends it into Xero as well.
Yep.
Great, thank you.
Thanks.
Okay, so thanks for that demo, Katie, and just final time for me to say thanks very much for your input, Andy and Katie, in this.
Thanks for your time.
Thanks, Lee. Great stuff. It's always really useful to see a client using the software in practice. It really brings it to life. And the most important thing when you are integrating the software is to do that process mapping of the different levels of management and authority over purchase orders before you actually do the integration. By the way, if you'd like a copy of the template that we used in that piece, then just drop us an email on this address here. Okay, it's time for Disc and yours truly now, and I'm looking at the I style this time. And for those of you that know me, keep a lookout for some of the characteristics, because I'm 50% D dominant and I'm 50% I. So see what you think. Hi everybody, and welcome to Ascentis TV and the series that I'm doing on DISC and personality profiles in the workplace. This time we're going to be taking a look at the influential, or the I style. So let's just have a brief recap about what DISC is. It was that famous 20th century psychologist Carl Jung that said, until we make the unconscious conscious, it will direct our lives, and we'll just call it fate. We know that dysfunctional teams and the associated conflict that goes with them are the #1 cause of poor business performance. But we also know that teams that feel highly valued and listened to and understood are the bedrock of all successful businesses. DISC makes the unconscious conscious. It makes us more self-aware about how our behaviour affects others, and therefore how we can develop highly productive relationships and create successful businesses. You remember from previous episodes in this series on DISC that the team here at Ascentis do not share the belief that your team is your greatest asset. We believe that your greatest asset is your ability to attract, develop and retain the right people. DISC is the antidote to the dysfunction, and it's the creator of highly functioning teams. I-types, just like the D-type profile, reflect a communication style that is active and outgoing. However, unlike the D-style's questioning, skeptical and task-first approach, I-type people combine that confident style with warmth and optimism, and they're more accepting and have a people first focus. In terms of the 8 priorities we talked about last time, the I type focuses on enthusiasm, though they are influenced by action and collaboration. You remember the I style person from episode 1 in the elevator who shared his amusing tale from a previous seminar that he'd been to. And you may have thought that he was a confident person breaking the ice and making people feel a lot more comfortable. But that would depend on your own working style profile, because you may have thought that he was a bit of a clown, inappropriate, unfiltered banter with people that he didn't even know. Or whether you're conscious or unconscious and what conclusion you draw, that's what DISC is all about. An I-style person communicates with others in an enthusiastic, self-promoting and sociable manner. You'll notice charm and friendliness in the tone of their voice, and they love to work as part of a team, and they love the recognition that they get for the results even more. Let's bring this to life with some people that we all know. I-type people love to take action, and they love to persuade other people to take action as well and try new things. So they're great people to have around if you want an innovative, positive member of your team. Richard Branson is one such individual. His vision for the future, constantly bringing new ideas, changing his business and reinventing Virgin in different markets, always on to the next thing, and obviously a real showman as well. In fact, in show business, almost everybody is an I-style profile with high levels of animation in the way that they communicate in a warm, friendly and approachable way. And who displays those qualities more than Dolly? However, all DISC personalities' strengths must be viewed from another person's perspective, and none so more acute than those personalities that are polarized to their own on the chart. So as you can see, for an I-style person, those characteristics will be most at odds with a C or conscientious style profile, because the C style prioritizes accuracy with strong influence from challenge and stability. The I-type profile has a deep need to be liked, and this can spill over into negative impact on others. The C-style person, to the C-style person, the I-style is often interpreted as untrustworthy, indiscreet and frivolous. An unself-aware, influential I-type person can come across as being overbearing, overwhelming, talking too much, talking over the top of people, not listening to others and lacking judgment with unfiltered, impulsive communication and behaviour. It's easy to see how an unself-aware C-type person who is deliberate, diligent, formal, conscientious, precise, how they would be aggravated by that overbearing I-type personality. And this is where we're going to get conflict, and that's what DISC is there to prevent. But what if the influential I-style person had a thorough understanding of how their strengths may be interpreted by others, and by making subtle changes to their style of communication, they were able to empathize with those around them? Just by toning down the enthusiasm, take the excitement down a notch, make time for others to speak, and when they do, truly listen to them and value their input. And in turn, what if the conscientious individual knew why their I-style colleague behaved in the way that they did? That all they were trying to do was to achieve the best for the business and therefore everybody around them. That their boundless enthusiasm and the need to be heard is just their personality, it's just their working style, and it shouldn't be taken personally. What you now do is you take a destructive, dysfunctional relationship and you turn it round into a highly functioning one. You've made their unconscious bias towards one another conscious in both of their minds. And now you have two individuals who understand each other completely, who empathise with one another, who are no longer offended by one another, and rather who work in a productive way to achieve common goals by drawing upon each other's strengths. So remember, your greatest asset is your ability to attract, develop, and retain the right people. So take your business to the next level by giving your entire team a DISC assessment. And you will create a team that are empathic, trusting, and understanding of each other's motives, who then engage in productive, dispassionate, healthy debate, which leads to buy-in and a commitment to the cause, leading to accountability and a focus on your results. Next time we're going to have a look at the S-style profile. So I'll see you then. All right, so if you've been watching all of the episodes on DISC that I've been doing, you should have a good understanding now as to the power of DISC in your business. And if you join Ascentis as a client, then all directors at board level get a DISC report included at no charge. We feel it's really important that you do that to get a good understanding of your strengths and your challenges in the workplace, and also some appetite to roll it out across your team. Currently, Ascentis are still the first and only Wiley DISC consultants in the UK. So if you're not a client of Ascentis and you'd like that kind of advisory work compared to maybe the compliance work that you're getting from your accountant, we'd love to hear from you. Get in touch here. Okay, now it's time for Mark Overend to try and make some sense out of the Westminster Muppet Show.
Hi everyone, welcome to this month's updated tax tips. As you can see from the image, we are reporting on the massive U-turn that the government's done and basically the scrapping of the vast majority of the changes that we talked to you about recently. We sent out the budget update by itself. I guess that was a bit premature of us. We're going to go through now the tax changes that have survived and those that have been scrapped. Jumping straight in. Corporation tax, you'll recognise these slides if you saw our last video. All I've done is simply update the slides to show what's stayed and what's gone. So we last presented on this, we said that corporation tax was going to stay at 19%, it was going to be a flat rate, and that there will be no tax rises coming. Well, that's changed. We're going back to the position we were in before. Corporation tax will now rise from the 1st of April 2023. I think that most of you who've had a pre-airing meeting, we've talked about this. It'll apply to companies with profits above £250,000, absolutely. Anybody with profits less than £50,000, you'll stay at 19%, and there'll be a hybrid rate in between. One change that has stayed in place is that the annual investment allowance, with that limit, will stay at £1 million from 1st of April 2023. So that's a welcome change that will remain in place. Usually the annual investment allowance is the first thing that the government changes. So ironically, they've actually left that alone. We don't have any further updates on the super allowances at the moment. So we still assume that super allowances that allow you to get 130% tax relief on the cost of brand new assets bought, we presume that that will end in April 2023. Moving on to national insurance. So we talked about the fact that the 1.25% increase to national insurance would be reversed from the 6th of November. Well, that is staying in place, primarily because I think that the legislation was already going through Parliament and it was actually too late to stop it. So that change will still take effect from the 6th of November. So both employees and employers will pay the old rates of national insurance from the 6th of November. That 1.25% increase is still being scrapped. And we're still left with the hybrid Class 1A national insurance rate of 14.53% for P11D benefits when we come to do the P11Ds at the end of the tax year on 5th of April 2023. Now, the big change that was scrapped is an income tax. So whilst the 1.25% increase to national insurance has been scrapped, all small business owners will be devastated to learn that the associated increase to dividend taxes will remain. And so now the current tax rates that apply to dividends of 8.75% for the basic rates and 33.75% for higher rates will remain in place going forwards. They're in place now and they won't change. In addition to that, the proposed decrease in the basic rate of income tax for earners through pay-as-you-earn, or for landlords where you pay 20% of tax at basic rates, it was proposed that will go down to 19%. That change has also been scrapped. Everybody's going to continue paying income tax at 20% in that threshold. And so actually, where we thought we were going to move to a position where this income tax year was going to be a bit of an outlier in terms of higher rates of tax with lower rates of tax applying next year, that's no longer the case. The higher rates of income tax that apply now will continue to apply until another Chancellor changes their mind. Hopefully that's not next week. The stamp duty changes are all going to stay in place. So the threshold at which we start to pay stamp duty on the purchase of our first residential property has moved from £125,000 to £250,000. That stays in place. And as do the changes to the Seed Enterprise Investment Scheme, which lifted the amounts that an investor can place into a company and qualify for tax relief. That limit of £200,000, that increase is still in place. And the amount that a company can raise through the Seed Enterprise Investment Scheme, that limit increased to £350,000, also stays in place. So there is a small modicum of comfort for small businesses looking to raise investment. Those encouragements for growth are still there. Unfortunately, the IR35 changes, which were going to be the repeal of the legislation brought in 2017 and 2021, which meant that the public sector and private sector companies respectively became responsible for determining whether subcontractors fell within IR35 or not. We were going to repeal that. Now we're not. That means that the responsibility will stay with those end users. So the chaos that's caused for many subcontractors who found it difficult to get work with organisations who take blanket approaches to IR35, unfortunately, it looks like that's going to continue. IR35 itself and the assessment of whether a subcontractor falls to be actually deemed as an employee or not, none of the legislation for that has actually changed, and so all those rules remain the same. It's just who's responsible for assessing it, and that's going to remain as it is now. It's going to remain with the end user. Quick tax tip this month. Well, very difficult. We originally said that you should look to defer income to next year because the income tax rates were going to go down. All I can say at the moment is that we still haven't actually had an official budget. That is due still next month in November. We're just having announcements. Apparently, Jeremy Hunter said there is more to come. And so at the moment, we find ourselves in the very concerning place as we don't actually really know what's happening. There's not a lot of certainty around. It's very difficult for us to plan as to what to do. There may well be more changes to come. I think the best thing we can say at the moment is let's wait for the official budget and let's hope that we actually get some certainty soon.
Well, that was recorded this afternoon and will probably be out of date by the weekend. Right now it's time for our very own catalogue model, Lee Kosnowski, to bring you up to date with AdminMin. Take it away, Lee.
Hi everyone. We've got all the regular deadlines there for you at the bottom. If your year end is 31st of January, or indeed it is 31st of October 2021 and you got an extension from Companies House, you'll need to get those accounts in by the end of the month. In other areas, we have a new recovery loan scheme. RLS version 3 comes into effect from the 1st of August. Lenders are still being accredited there and will probably get more information as they get through the system. But some of the key points to note there are an interest cap of 14.99%, interesting given the current base interest rates, and also a personal guarantee. So they are allowed to put personal guarantees on these now with the exemption from residential properties. The UK living wage was announced in September. Those rates are on the screen for you. Now, it's important to note they're not mandatory. They're only if you signed up for the living wage quota. But we do have national minimum wage coming into effect. That'll be next April. Those of you that live in Bradford or pass through Bradford are now in the CAS area, and charges will be levied on businesses given or for any commercial vehicles there. There are exemptions available for if you've only got one vehicle, so it's still well worth getting onto their website and claiming those. The energy relief scheme, that also came into effect from October. Now, all the discounts there are applied automatically. I've seen on a few occasions now some texts asking you to fill in details. They're spam, and be careful of giving people that information. And finally, HMRC have kind of caught up with pay-as-you-earn, as they have now with VAT as well. You can pay your pay-as-you-earn by direct debit. So if you go online and sign up to their direct debit scheme, you should be able to pay future pay-as-you-earn payments by direct debit. That's all for this episode. Thank you.
Okay, guys, you're all up to date, and it's the end of the show. Sorry about the knitwear, and we'll see you next time.